All right, here we go. We're just getting started in April, so we're going to be talking about the multifamily market right here for my investors out there. Anyone who even thinks it's a great idea to get buy a multifamily to start off to buy your first home, which is exactly what I did and how I got my real estate career. Been an investor for over 20 years now. I started out by buying a multifamily home, lived in one side, rented out the other two apartments. It was a great deal for me to get started, and I was able to roll that equity into purchasing another house down the road right here. But the investing part, I've been in it for, like I said, over 20 years. I still own rental property today. I also have fix and flips. I have also kind of done those over the years. So I've got some experience here, and we're going to talk about what the market is looking right here. If you're looking to buy or sell and get into the real estate market, or just increase your portfolio here with some rentals, we're going to talk about that right now. So let's dive right in here. The multifamily, this is for the whole capital region. We're covering the area here, but let's dive right into it. So let me bring this up, and we'll get rid of that other side right there. And we're going to shrink this down too, because you don't want to see me. You want to see the stats and the numbers that are coming up here. Okay, banging it right in here. So inventory is at historic lows right now. So things are coming down. And we're going to move my picture, boom, right over here. The lowest level since 1997, sort of. It's been a slow start to the season right here. And, maybe winter's hanging on a little bit. Maybe that has something to do with it. Not really sure. We are expecting to see those inventory levels increase like it normally does, because we're really just starting off getting to the start of that busy real estate season. So, we are expecting to see those numbers increase as we go through here. But the capital region supply right now is 1.7 months. So prices are holding pretty firm. Right now, the Albany County median sales price is $314,000, which is up about 2.6% or year over year here. And the spring demand, as we just talked about, that is building. We're going to see that nationally. It rose 4.6%. We expect to see that to continue to rise as we move on here. The rates are the wild card, though. This is kind of with you. We're going to talk a little bit more about rates down the line, but at one point, about a month ago, it was just under 6%, and then kind of, boom, came up a little bit, and it appears to be correcting and coming back down at the time of this video. So we will see how things go as we continue on through April. But the multifamily inventory, let's see what we got right here. As you can see right now, active listings are down. Okay. New listings are down. Sold listings are down. Pendings are up right over here. Okay. So you can see 340 active listings down from 372. So here are our numbers right over on the side. But we can see right here with our bar chart here that they have dropped in everything except for pending that are going up. Okay. So that's what we're looking at as far as inventory. And hopefully we're going to be seeing these active listings come up. And I am pretty confident that we will see that as we're moving forward. How is it going to compare to what we saw in 2025? We have yet to see. A lot of this is going to have to do with interest rates and what happens with those moving forward here, because obviously interest rates drive a lot of what people do as far as real estate is concerned. So the multifamily pricing, though, so the medium list price activities, it's up 10.2%. You can see right over here. Here's the medium list price, medium sales price, March 2025, March 2026. Medium list price is down. The medium list price is up, the medium sales price is down. Let me say that compared to what we see over here in 2025. So the medium sales price is down almost 7%. The average sales price is down almost 6% there, and the 2026 median sales price is $259,500. That is up, though, a little over 8% from year to date. Okay, and the average list price activities is up 14%. So market speed and efficiency. What do we got for market speed and efficiency right here? So properties are moving fast. The market rewards prepared buyers and sellers. So you're going to want to plan. Whether you're buying or selling, you're going to want to plan. And by the way, if you want to copy this report, my information is down below. Message me with any of your real estate questions. Message me that you want to see the report, either email or text me. I will get that out to you so you can kind of break this down and get a little bit more in depth, because I just kind of scratched the surface of a little bit of it, give you the main ideas. But there's some more information on here for you to check out. But median days on the market is 10, which is down, all right, from 12 days last year. Average days on market is 33 days. which is up slightly. List to sales ratio is 99%, and we got about 2.75 months, a little less than 2.75 months for the absorption rate. And the year-to-date absorption rate, it's actually this month or past month, it dropped a little bit because 2.87 is what we're seeing year-to-date. So, remember, being prepared and having a plan, whether you're buying or selling, is going to be key to getting in there and getting the best deal for yourself here for these multifamily properties. So, the price distribution, as we're seeing right over here, the biggest price range we're seeing is that 300,000 range right in there. Okay, that's got 26 sales. That 200 to 250 has got 19 sales. Above that 400 is 8 sales, and above 500 it's 5 sales, which is down from last year's March's numbers right there. So the strongest pipeline is right here, that 300 range. Even you can make an argument that that 200 to 250 range kind of thrown in there too, because you got 19 sales. It's really like covering the 50,000 span compared to the 100,000 span that 300 is. So, thing is, if you get below that 200 range right there, you're kind of looking at a property that needs quite a bit of work, and not a lot of investors want to put that much work into it, but some will. There's opportunity. Some of those properties got some really good opportunity. It's also depending where you're buying and what your strategy is here. All right, so residential market. Talk about this a little bit here, okay? Albany, the median price is $342, which is up, okay? That's the smallest area that it's up. The largest area that's up is in Schenectady, followed by Rensselaer, and then Saratoga. All those are pretty healthy, up 7.5% to 8.5%, depending on which one you're doing right there. Albany did increase 2.5%, but it's kind of lagging behind those other three markets right there as far as a year-to-date change as far as the median value on properties. So, Saratoga leads on price. Saratoga is very popular area. It's our highest price point, pretty much on all things in the market right there. So there's no surprising that's leading the price. But the strongest growth that we're seeing right now is Schenectady, and has been Schenectady for a while. So if you're looking for value and appreciation value, stuff like that, Schenectady is probably going to be your best bet for that. If you're looking for steady growth with healthy rents moving forward, then Saratoga is a great area, and Rensselaer is a good area for both of those as well. So mortgage rates. So we talked a little bit about that. So at the end of February, it got just below for a short period of time that 6%. I think 5.98%, something like that. There was some volatility in the markets. Okay, volatility in the markets and some things nationally that have been, or worldwide that's been going on that caused that to kind of bump up a little bit. Those rates came up. It got high as 6.64%, but has since started to work its way down a little bit. So now it's at 6.38% is where the 30-year fixed is at this point right now. So it's up 0.4% year over year. The monthly payment on that 6.38, if you can see our number right down here, is a little over $2,700 on that one right there. So those rates, they still haven't changed the forecast because they're still expecting those rates to kind of gradually come down. And I see no reason why that will not as we progress through 2026 for those rates to continue to come down, which will do two things. It'll bring buyers on the market, it'll bring sellers out too. So keep an eye on those. Subscribe to the channel. Come back to my market report next month. Keep an eye on that. I'll let you know where we are progressing with those market interest rates to see how many buyers are coming on the market, how many sellers are coming on the market, so we can see what is trending and which will kind of shape a lot of people's strategy as far as investment properties go. All right, some emerging trends. Let's talk about this right here. Albany's ranked the top 10 nationally by Zillow as an area, okay? Number 8 among the 20 hottest seller markets, okay, in the area. A big thing right down here is you see New York State policy is in flux right here. So Governor Hochul has proposed a budget which includes some reform to speed up housing construction. So we're keeping a very close eye on what is going on because we do have a housing shortage right now. We need to build. We need more houses in here. We don't have enough housing for everybody that is coming, that is in the area. So we need to see this start to happen. So we're keeping a very close eye because that's going to affect prices and rates and everything like that. Redfin says nationally there's 630,000 more sellers than buyers right now. So those are some of the things that we are also keeping an eye at as those interest rates come down, because a lot of people are locked into those 3-4% interest rates that we saw when they were refinancing a few years back. They don't want to get rid of that nice low rate. So they were staying on those rates instead of going in. But as those rates come down, we're expecting to see some of those people who are looking to upsize or downsize kind of come out of the market and start to put those things in there, and we'll start seeing that inventory start to rise a little bit. Pending sales are at a 5-year high for March, so there's quite a bit of activity as far as people buying in the month of March. So we haven't seen that much activity in the last 5 years. So local hotspots we got Saratoga Springs, always a hot spot. So people are looking for areas that are walkable to downtown. There's a lot to do. There's Congress. If you ever watch my videos, go to my channel, Living in Saratoga Springs. You will see all my videos on there. We talk a lot about the race course and all that stuff like that. But multiple offers are common in Saratoga Springs, but it's a high demand area because a lot of things are very walkable. Clifton Park, competitive suburban market right now, top rated school district, and it's very close to I-87, so commuting is getting back and forth is very easy. Malta Wilton, okay, so this is a growing corridor right now, right outside of the Saratoga Springs area. Global Foundries is growing. There's new construction going on all over in both those areas. Wilton is right next to Saratoga, so it's a short drive into Saratoga. Depending on where you are in Wilton, it's as short as 5 minutes to 10 minutes to get in there. So you got all the advantages of Saratoga Springs, plus the low taxes that you got in Wilton out there because of all the business they have out there. They're able to kind of keep those taxes low, which is a big bonus and a big draw for people in there. Schenectady and Troy, those are emerging markets that we talked about. If you're looking for growth, Schenectady is a great spot right there. We talked about that a few minutes ago. And Albany is that core city. There's a good rental base in Albany, especially being the capital area right there. So healthcare individuals in that area, plus the support system for the state with everything they got going on for the state employees in that area. So Albany's got some good spots as far as renting, a good rental market. Key takeaways right now. For multifamily investors. So inventory is shrinking. That absorption rate is going down fast here. So move quickly. Have your financing in place. I've got lenders that I can introduce you to help you, depending on different lenders, even depending on what your strategy is here. Just reach out with my contact information. Let me know. But you're going to want a plan in place. You're going to want to see these properties, get alerts from your real estate agent. I'm always putting all my clients on alerts so they get notified right away before it's hitting Zillow, Realtor.com, and stuff like that. So you want to be able to move quickly and have your funds ready to go. So residential sellers, a spring 2026, a window is coming right now. So we're expecting it to be strong. We're expecting to see more properties come on the market. So, but you want to price your property well. Okay. Those overpriced properties are sitting. Those properties that are priced properly are actually getting a lot of attention and everything like that, which is really what you want to see. Residential buyers, get your plan in place. Get yourself pre-approved. Shop around. Get yourself the best rates, because we know rates are a big deal right now. Get yourself pre-approved. Get yourself set up alerts so you're getting notifications as well as soon as they're coming out. So because it can be a very competitive market right now, so you want to be one of the first people in there checking out that place. Watch mortgage rates closely. As I said, the trend is expected to keep coming down. We're going to be keeping an eye on that on our end and letting everybody know. And really, and this goes any market right now, but you need to kind of police your risk for your investors. Make sure you're weighing, how much risk and how much money you're putting into like this. And different markets require different things, different people at different thresholds and all that too. But make sure you're keeping an eye on that. We're also going to keep an eye on this new legislation here that's supposed to be the budget here to see what becomes of that. See if we're going to spur some new growth as far as building construction here. So again, my name is Chris McMahon, a local real estate agent here and investor here in the capital region. So feel free to reach out with me. My contact information, you can call, text, email, whatever's best for you. If you would like a copy of this report, send me a message. I'll send this right to your inbox here. You can get a copy of that report and start checking some things out, and subscribe to the channel so you get next month's report when it comes out, guys. All right, so I will see you guys on the next video.